Welcome, everybody. This is Weekly Quantum World Detangled, Season 2, Episode 10. We got it right this time. I'm here with my friends.
Hi, everyone. Denise Ruffner, VP of Business Development for INQ, coming to you from lovely Southern California. And Tommaso.
Hi, everyone. Good morning. Tommaso De Maria from Singapore, CEO of Entropica Labs. And today we have a special guest, our first investor from New York, Morgan Polotan.
Hello, everyone. I'm an investor at Comcast Ventures and excited to be here, coming from New York.
It's a pleasure to have you, Morgan. We always start out with a little bit of a personal chit chat, so I did my research into your background. Some people are easy to research, others not so much. But your LinkedIn profile gives a very obvious clue. Ask me about my SoundCloud. What is your DJ history? What kind of beats? And where can we find you on SoundCloud?
SoundCloud.com/Morgan Polotan. I was very creative with my DJ name. I just picked my first and last name. I figured if it works for David Guetta, it would work for Mike. I was into electro house and kind of the clubby stuff. I have 2 mixes up. They are quite atrocious when I look back at it, but they were my first 2 mixes, my very first controller, and it was a lot of fun. And so feel free to take a listen. It's not safe for work. There's some explicit language in the song, so just listen to it at home, please.
Well, most of us are working from home, so it's probably safe while you're on your Zoom calls. Just make sure you keep it PC. You also work in cryptocurrencies and blockchain a lot, and I think that's a strong affinity for yours. What's your perspective? Bitcoin has seen a little bit of a recent rally. There are some projections out there that it might go up to 60, 100,000 or more. Is that something you still follow, and what's your opinion?
Absolutely. I mean, I can't make any kind of price prediction, but the only thing I know is that there's a strong probability in my mind that Bitcoin is the new gold, and that for the younger generation who might previously buy gold as an inflation hedge, or to protect wealth for some percentage of their assets, they're more likely to buy Bitcoin. And so if the gold market cap is 7 trillion and Bitcoin reaches parity, that given the scarce supply of Bitcoin, that reflects a certain price per coin. I don't know the exact number off the top of my head, but I know it's much higher than the 17,000 or so it is now. So, I think it's smart this is definitely not investment advice, but I put, 1% of my assets in Bitcoin and probably pass it to my kids at some point.
And I live in Florida, where it is perfectly legal to do so. Definitely good advice. You tweeted a few weeks ago, somewhat jokingly maybe, that hey, anybody would like join my quantum computing SPAC. What is a SPAC? Could you briefly explain that, and what makes SPACs so interesting? Do you think there are any SPACs in quantum computing on the horizon?
It's a great question. So a SPAC is a special purpose acquisition company. It's kind of like a venture fund in the sense that you raise a bunch of capital that is called a blind pool, meaning you can kind of do what you want with. Except instead of investing in a lot of early stage companies, you acquire one larger company, which then gets merged into this publicly traded shell corporation that was set up. And so, it's a way of getting a company public without going through the traditional IPO process. It's gotten popular in tech in the recent years. And, I tweeted that out because the very first SPAC that I was made aware of in tech was when Chamath, I'm going to butcher his last name. So Chamath, I think everyone knows who he is. When he took Virgin Galactic public via a SPAC, and Virgin has, de minimis revenue as a deep tech startup and really much a vision story. So, that does remind me of Quantum in many ways. A lot of the best companies do have zero revenue, and they're definitely deep tech. In terms of a Quantum SPAC, I think the biggest difference is that, Virgin Galactic's business that they want to enter is space tourism. So it is a consumer-facing play. And in the age of Robinhood and retail investors driving markets, I think consumer businesses, at least for the first wave of SPACs, tend to do better. It's hard to explain to people who are professionally trying to invest in quantum what quantum computing is. It's probably even harder to communicate that to your average retail investor. So I don't think a quantum SPAC will be on the horizon in the near term. Unless we get to a point where we have, kind of a revenue generating company, and then perhaps a SPAC will be an alternative that they consider.
And SPACs are very new financial instruments that are currently very popular, as you explained. I wrote an article about it on LinkedIn a few weeks ago. There are some rumors out there that people are looking at it because IPOs might be too early yet, and SPACs are a good alternative for it. Look it up. Let's dig a little bit more into your investing activities with Denise.
All right, Morgan, thanks for joining us. It's fun to have you on. I'm excited you're our first investor, as André said. What quantum investments have you done?
The one and only. So we've done a single investment into Zapata Computing, which I think obviously everyone here is familiar with. But for those who are listening who may not be familiar, they are a quantum computing software company based out of Boston, and we led the Series A.
Awesome. And Christopher Savoy was a guest on the first show of this season, so it's great that you're also on.
Christopher's amazing.
Yeah. I wanted to ask you about your outlook on the overall quantum market and how fast you see it growing.
So it's growing very fast right now, and since probably 2015 from a investment dollars in perspective. And I would say that has caused a growth in headcount, employees, founders, and companies, which is extremely exciting. When you look at the actual annual spend of enterprise, in other words, the market opportunity for quantum from a revenue perspective, we're not there yet. But I tend to think that it's a very binary shift that will happen. So, we'll have very little revenue for a while, and then, there'll be an inflection point at which revenue will start to grow and enterprise spend will start to grow quite rapidly. Not to make a fool of myself around predictions, but I've always had in my mind, roughly 3 years away. So kind of this 2023 timeline in my head as when we might, have a shot at commercial usefulness. And, this is a consistent timeline that, we led the Zapata Series A, I believe it was early in 2019. So, back then it was 4 years, now 3 years. So I'm sticking to my prediction. I'm almost certainly going to be wrong, but hopefully not too wrong. And the reason that I kind of get excited about that timeline is that, if you look at the publicly announced roadmaps from some of the hardware companies, they all start to they all have goals, let's say, to hit a qubit count and qubit performance level that I believe many would peg as being the threshold for commercial usefulness, assuming the current state of algorithms. And of course, algorithms can improve as well, which is something we hope teams like Zapata and others do. And so I think that will be a watershed moment, the next big milestone in my mind after quantum supremacy, which was reached last year.
Great answer. One more question that I know everybody asks me about, and so I'm going to ask an investor, is there a quantum winter?
There's not right now, but it is. It's the number one risk to the entire ecosystem in my mind. The danger of a quantum winter is basically, unmet expectation. And, we've seen AI winters, multiple AI winters since the 1950s, when the first group of scientists got together, I believe it was at Dartmouth for a summer conference, and said, we're going to build general AI over the summer. And obviously it proved to be a much harder task that we're still kind of cracking away at. And so what tends to happen is, financial capital gets excited about these goals. We tend to overinvest. We tend to underestimate the impact, but overestimate the timeline. And then when it doesn't materialize in the timeline that investors expect, then we pull back all our capital and say, oh no, we got burns, we lost money. And then the winter kicks in, right? When funding is not as easy to access. More recently, we saw this in crypto. After the 2017-18 run up in Bitcoin prices, every investor poured some money into something. And now in 2020, if you talk to a crypto founder, they'll tell you it's a lot harder to raise. So I think these are the natural cycles of things. I think the good thing is that some of the risk of quantum winter is within our control, right? So it's within the control of a founder, it's within the control of an investor, not completely by any means, but you can at least make kind of more conscious decisions about the strategy of your company and the strategy of your portfolio with that in mind. So just to kind of give two examples is, if you're a founder, you generally have a spectrum of fundraising strategy. On the one end, you can say, I want to raise as much as possible and adopt the most ambitious goals with the most optimistic timeline and not leave myself any buffer. On the other hand, on the other end of the spectrum, you can say, I want to raise as little as possible to make the minimal amounts of progress and leave myself the widest margin of error. And there's probably a sweet spot in between the two, but the closer companies hew to the former, the higher the risk of a quantum winter. And so you just want to balance those two forces.
Great answer. I'm going to pass to Tommaso.
Thank you, Denise.
Sure.
Thanks. Sure. So, hi, Morgan. Pleasure to talk with you again, and thanks for joining us. I'll actually continue from what you were saying now, right? So I love the concept of risk. I find it very interesting. And you think about winters. You brought up the AI winter. And I think to some extent is a bit of an unfair comparison to quantum, because the problem with what happened in artificial intelligence and machine learning was more of a technology issue rather than a capital issue. While now it sounds to me like we are talking more about capital issues in quantum computing. What if investors stop putting money into the technology? So my question for you would be the following. What do you think is the biggest risk for the ecosystem moving forward? Would it be a technology risk, a financial risk, or a market risk? Well, and I can define what I mean. Technology, the technology doesn't work. Market, the technology is not useful. Financial or capital, there is not enough money to push the technology forward.
I don't think you can really separate technology and financial risk. I mean, there's obviously technical risk in any emerging technology like quantum or AI. And so that's a given. And, I'm not the one who's best positioned to judge that, right? It's folks like yourself who are. And so that's why I think I focused on the financial side, because, if you assume there's a given set of technical risk in quantum, let's say it's 100 units of technical risk, right? And then you can choose kind of how to manage that risk. And that kind of dictates your company strategy and your fundraising strategy. And so, there's the risk of the tech not delivering on time. there's also the risk in any startup that someone beats you to the prize, right? So there's no obvious answer. My feeling is that, you know, in emerging technology, when there's a lot of technology risk, that the risk of running out of money or investors losing their appetite before you achieve the prize is the bigger risk. Whereas in startups that are dealing with more established technology, the risk is much more that, you know, someone beats you to the prize. So if we're talking about, you know, ride sharing versus quantum computing, right, I think the risks are very different. So, you know, like I tend to favor a more conservative approach for emerging technologies. I mean, you know, just to give you a sense from the VC landscape, right? I think like crypto, pretty much every kind of major VC has placed at least one quantum bet, right? At least every major VC who kind of has like a frontier tech practice or invests in deep tech in some way, right? So maybe 60%, 70% of funds who invest in deep tech either have made a quantum bet or are looking to make a quantum bet, right? And it's typically right now, pre-revenue generation and pre-exits, it's probably going to stay with one company. It's unlikely that a VC firm will make two quantum bets unless they're a quantum focused fund, right? But like they're not going to overweight on quantum before there's any revenue or exits. And so as a startup founder, you know, if 60% of the available investor pool has already been spoken for, right? Now you're working with a smaller pool of potential investors that actually shrinks over time as more people enter the space because there's not new capital being allocated until there's some kind of successful event. And that's one of these things that can trigger a winter, right? You know, you have new companies coming in because everyone's excited about the space and there's fewer investors to target. And then perhaps some of the earlier companies who had raised several years ago disappoint in some way, right? Maybe they raise a down rounds, maybe they, you know, it's an acqui-hire or an IP sale or something that was not the outcome people were looking for. And then then that kind of, you get into this negative feedback cycle where, you know, every investor made a bet and it was wait and see. And then there were the new pool of investor and the new capital pool kind of dries up. And then bad things happen. And then you get this kind of like general conventional wisdom, like what happened with clean tech in the 2000s, where, oh, quantum is a bad space. Like we lost money and no one's entering the space. That's when like the real winter sets in. So that is honestly like my biggest worry. And if I was kind of in a founder's shoes, and of course as an investor, you know, I think about this a lot too, but it's all about how do you stay alive until we hit commercial usefulness.
Right.
That's my MO.
Let me interject one quick thing. Sorry, Tommaso, before you move on to your next question, because we look at all the data. So far, there have been 23 deep tech venture capital funds that have invested into quantum technologies. I don't know how many deep tech funds are out there, but that's certainly a good share of them. I'm in touch with most of those that made investments this year, and many say they are unlikely to make another one in the next 12 months. You know, they are hoping to make one in 12 to 18 months probably, but there's certainly a little bit of a buffer. We're releasing a new study next week. So far, 1.3 billion US dollars have been invested in 2020 in terms of private capital into quantum, just to add some numbers. Go ahead, Thomas.
No, that's great. And thank you, Morgan. Yeah, I think that is a really great answer that hopefully will be useful to a lot of the people who are listening, especially if they're thinking about entering the space. As a follow-up question to that, there is something that I think is very important for me specifically as a founder, but I also like to ask investors, which is, if you invest in a company in the quantum computing space, and you said it a few times, Morgan, like it's mostly zero revenues ventures at this stage, then how do you determine success with time? what metrics do you look at, and what does excite you in a company? Like, how can you go, 2 years down the line and say they've done really well, or maybe say they've done very poorly?
It does differ a little bit by company, but let's take a hardware company just to kind of make perhaps the most general example. So your goal is to build a quantum computer. You're not going to have revenue anytime soon. That's not the metric that you're being measured against. And so 2 years go by. How do you know whether you're doing well, right? I think it's hardware progress, right? And there are company architecture specific and industry specific measurements that are made. So it's not actually, I think in that case, the investors take a lot of cues from the founders, right? And the technical team, because they're putting a lot of trust in, like, okay, this is the way that you're measuring progress. And are you making progress? Are you achieving those benchmarks? So I think the role of the investor, and like how I would think about it from a hardware perspective, is when you make an investment, you agree on a roadmap, you agree on milestones for the next round. Like that's the key thing. Can you achieve in 12 months, assuming you're going to raise another round in 18, right? 12 to 18 months. What is your story for the next set of follow-on investors, assuming you'll need more capital? What milestones do you need to hit to tell that story? And working backwards, like on a quarterly basis, are we hitting those kind of OKRs in the meantime? So if it's not revenue, it could be, qubit count or qubit performance or algorithm benchmarking, whatever it is. Maybe a certain set of prototypes that are built and at an increasing complexity. But I think that's where the investors, can be useful to hold teams accountable. And of course, teams are holding themselves accountable, just like an external party, right? Just making sure that, like, okay, in order to raise next round, we're not gonna show a revenue benchmark, but we're gonna show that we can run this algorithm at a certain performance. And if we can do that, we feel like that will get the next set of investors excited enough to continue to fund the company, right? So it's not maybe like a satisfying answer, but I think that the important part is that there's alignment, right, between the founding team and investors. What you don't want is investors who, are misaligned, either because they don't understand the space and expect revenue prematurely, or just because there hasn't been the explicit conversation about it. But you just want to make sure the team is aligned and is in sync with the external market, right? So that's where your investors, I think, can be helpful. Is we spend all of our time talking to other investors when we're not talking to founders, and so we'll probably have a better sense, given that the founders are usually heads down building the actual technology. We'll probably have a better sense of if we're doing an A, what do B investors care about, right? And is there enough of a market there, given the milestone we think we're going to show, to have a good chance at raising follow-on capital?
Fantastic. Thank you. Great answer. Thanks. André, all yours.
All right. Thank you very much. Morgan, it is time for our rapid fire quiz. Your challenge is to answer in a word, maybe a sentence, not more. There's no right or wrong. We want your feelings, your emotions, and dig deep. Put on your creative DJ hat. So if you're ready, the Marshall Bruce Quantum Questionnaire. Morgan, what would you say is the principal aspect of your personality?
Extroverted.
What is the quality that you desire most in an entrepreneur?
Grit.
How about scientists?
Curiosity.
What is your best virtue?
Persistence.
Your principal flaw?
Laziness.
I know how that feels. What do you appreciate most about working in quantum tech or with quantum tech founders?
Living in the future.
If not a quantum tech investor, and you invest into other technologies as well, but what would you be doing right now professionally?
Professor.
Of what?
Economics.
Do you have a favorite scientist?
Ray Kurzweil.
Favorite entrepreneur?
Elon Musk.
Do you have another favorite entrepreneur?
No. Christopher Savoy.
A little bit of a technical question, but maybe you have an opinion. Do you have a favorite quantum computing modality? Superconducting, trapped ions, photonic, etc.
Topological.
Why?
Because if it works, it's the holy grail.
Love that answer. What is your quantum dream?
I think lossless power lines.
Can you explain what that would mean?
Yeah, so, if we can figure out room temperature superconductors, and then we can build lossless power lines, that means that we can build renewable energy plants anywhere in the world, and then transportation to a city is not an issue. Typically, right now, you lose a bunch of electricity on the way, so location is a big constraint and blocker to shifting over to a renewable energy grid.
What is your quantum nightmare?
That it takes 50 years.
Imagine it doesn't. Tomorrow you wake up, magically, in your living room, you have the first universal, completely fault-tolerant quantum computer. Who are you going to give it to?
Whoever can build a hedge fund around it.
You are a New Yorker and an investor. We much appreciate your perspective and you being a guest on our show. It is great to see your side of the coin, and we hope to have other investors join us in the future. I would like to thank my friends and our sponsors, Denise Raffner from IonQ, Tommaso De Marie from Entropica Labs. And please go to SoundCloud/Morgan Polotan. Check out the Dirty Bass Ibiza mini mix when you're not working. This concludes Season 2, Episode 10 of the Quantum Weekly World Detangled, and you are now detangled.